Hello and welcome to NDTV Profit. You're watching the small and mid cap show. I'm Hiral Dadia. Two stocks that are in focus in today's session. The first one being Aditya Vision, an interesting one to watch out for because clearly on a YTD basis, the stock has more than doubled as well. If you talk from a company perspective, let's understand what the company does. A modern multi-brand consumer electronics retail chain headquartered in Patna, and it is actually run by a first-generation entrepreneur. A single store in 1999 to almost 130 outlets is what it has grown to. Let's understand the story of the company and what's the strategy for growth ahead. Yosham Vardhan, promoter and whole-time director at Aditya Vision, joins in. Yosham, good morning and welcome to the show.
Hi, good morning and thanks for featuring us on your channel.
Always a pleasure to speak to you. Yosham, my first question coming to you is, overall, if you see the kind of growth story that we've seen for Aditya Vision from a single store in 1999 to almost 130 outlets now, what is the key driver with the kind of growth that we've already seen? And moving ahead, what does the prospect look like for FY24 as a year?
So I would put it like that, key driver would be the population and under penetration in these geographies. Today we are operating in Bihar, Jharkhand and Uttar Pradesh. These three states constitute to about 30% of India's population. And if we see that penetration of white goods, it is the least in these areas, where maybe air conditioners in Bihar would be only 1% of household today has air conditioners. So we come from a story of the Hindi heartland, and we are very happy growing in Hindi heartland at 30% CAGR revenue over the last 10 years. We understand that these are the markets which is developing. In the sense, Aditya Vision opens its showroom and we create markets for OEMs as well as for us, and because of the under penetration and low level penetration with the impetus of retail financing, we are in the sense upgrading the customers to premiumization as well as creating markets.
Right. You mentioned about the key regions that you're present in as well. In fact, going forward, you do have a plan overall of opening almost 160 to 165 stores in FY25. Now, with Bihar, you are expanding to UP as well as Jharkhand in terms of regions that you've mentioned. So, how many stores do you think you will be able to open in the newer regions of UP as well as Jharkhand?
So I would say that if Bihar, with a population of 13 crores, we are able to open 97 stores which are operational at the moment, we see the same potential in Eastern UP, where maybe with 24 districts in Eastern UP, we have a potential to scale up to 50 to 60 showrooms. In Jharkhand, we are already on 22 showrooms and we have covered around 17 districts out of 24 districts. So still potential left in Jharkhand, as well as now we are penetrating into subdivision levels in Bihar. We have exhausted all the district headquarters and we are getting very good sales in the newer stores which are opening in the subdivision as well in Bihar.
Right. Now, from here, if you see in terms of the consumer durable space, and if you have to link it to the festive demand as well, right? The consensus so far has been that it has been slightly subdued than what the street was actually estimating. Are you seeing an inventory buildup that has happened at your level as well? And if so, what's the strategy with regards to liquidation?
I could say that for our region, we had a good festive, and it was this time festive was coupled with World Cup, and therefore we saw a good sale out, and inventories are maintained at the levels which we anticipated it to be. However, now in the Q4, we will start building inventory for air conditioners.
Okay. And if you have to divide this between offline and online, what's the division right now for Aditya Vision? How much of the sales comes in from online? How much comes from offline? And is there a strategy to grow the online side of business as well?
So for us, most of our significant sales comes from offline. Online will contribution will be negligible, because in the geographies where we operate, till today shopping is looked as a festivity where people love to come and spend time in the showroom. However, even with the online, there is penetration of online in Bihar, but the sales are very limited, and I can tell you that people look at online prices but prefer to come in brick and mortar showroom and shop, because for those geographies, these are first time buyers. They are apprehensive. They would want to talk to the manager, see and feel the products before they do the purchase.
Right. So from a demand perspective, I mean, rural is your focus. How are you seeing the demand build up in terms of rural areas as well right now? Because clearly, that becomes a tailwind at the moment the demand increases from rural India for a company like Aditya Vision. So what's the strategy with regards to penetration in rural India?
So we have a strategy where we do our expansion at a creeping cluster based strategy, which means that when we go in one district, we will open our next store in the adjoining district. By that time, when we go to the adjoining district, we have already become a name because of our earlier store operating in the next district. So we are confident that with the retail financing, the kind of offers and affordability which is reaching to our customers in the rural area, we are very confident that the demand is steady over mid and long term.
Okay. And with regards to the power situation in Bihar, how is that? Because that is one of the factors when you talk about consumer durables as a space in the region. Has that improved, and does that actually boost the demand for electronic appliances and devices in the region?
Yes, I must say drastically it has improved. We have, as per the installed capacity, there has been drastical transformation with power supply and electrification. Even rural Bihar or rural eastern UP have steady electricity now, and with the electricity, now each household is preferring to buy, like after television, we are also seeing a demand rise in the washing machine category where there are first time buyers. Also, the new categories are also shaping up, like kitchen appliances, or we would say a lot of households which had DC refrigerator are now upgrading to frost free or CBU. So it is replacement cycle has become lesser because of the new technology which keeps coming, and these brands also keep on introducing new technology, and the replacement cycle is becoming shorter. So definitely there is a very big room for growth.
Okay. And from here on, what's the kind of trend that you've been witnessing specifically with regards to margins on the product, and what's the guidance that you're looking at? What's the range you will maintain with regards to margins as well? Because we've seen that 7 to 10% kind of a range in the last 3 years. Are you expecting any further improvement to come in there, taking the volumes that you will look at?
So EBITDA margin for us will be, I think, stable from 9 to 10% is what last year we were at 10% EBITDA margin, and we look at sustaining these levels. And however, our gross margin has been more than 15% in the last 2 years, and we give a guidance of about 13 to 15%, but we have been over delivering.
Okay.
Which we want to do in future as well.
Okay. And from here on, if you talk about newer product additions, what would that look like? And how are you looking to fund the inventory? What's the debt level currently?
Yeah, so newer product addition is always on the cards, because if I say that in Bihar the penetration of air conditioners is only 1%, then what about kitchen appliances? What about chimneys? What about hobs, small appliances? It is even much lesser. So we are focusing on new category air purifiers. Like everything is now, water purifiers are not penetrated enough in Bihar. So there is a lot of room for newer product as well.
Okay. And where does
inventory, of course,
Yes.
inventory, as you asked me, it is for us, we have short-term debts which is required to fund our inventory, and it is at the highest level at March end, because that is the AC built up which we do, which get liquidated in Q1. And what you see is the March level inventory, which is the highest. As per store, we maintain an inventory of around 2 to 2.25 crore.
Okay. And if you have to look from a capex perspective, with the expansion that you're taking into consideration from here on, how are you going to fund that capex? How much will you require? And secondly, in terms of a store maturing or breaking even, what's the kind of timeline that you watch out for?
So capex per store is limited. It is about 50 to 60 lakh per store, which very well we can do it from internal accrual. We have been doing it. Till date, Aditya Vision has raised only 5.8 crore, which was during the IPO, and we have not done any fundraise, because our internal accrual has been funding all our new stores, and that will continue.
Okay. And any further debt that you will be looking to raise on the books? And if yes,
when you talk about break even, I would say that our store breaks even at 6 to 8 months from the opening, and our payback period, which will include the inventory and the capex, is less than 3 years for each of my stores.
Okay. So from here on, are you going to raise further debt to fund the capex? And if so, what will that take your debt to EBITDA to?
So we will maintain what we are doing at the moment currently, because with the debt also comes our internal accrual. So it is half funded by debt and our internal accrual, which is sufficient, and the levels of debt which you see right now, that will be the levels which we'll maintain.
Right. Very lastly, if I have to come to FY24, what's that magic number you're watching out for in terms of the top line? And what's the key milestone that Aditya Vision wants to cross, as a company, taking that the same store sales growth has been in that 14 to 15% range as well? So will that be something that you will be able to maintain?
Yes, definitely. I would say that we give a guidance of 20 to 25% revenue growth every year, but last year we have delivered 47% revenue growth. However, I would be conservative in the guidance. It will be around 20 to 25% is what we say, and definitely SSG is sustainable at what you said, over 14-15%. For the
Right.
H1, we have maintained an SSG of 19%.
Right. Thank you.
So I think I would sum it up by saying it's a Hindi heartland story, where there is most under-penetration and most populous areas where we are operating our business. We know the culture, we know the pulse of our people, we know their buying pattern, we know we have our connect with our customers, and we will establish the same model in wherever we go. We are right now in 3 states. We will also then moving forward go to other states in the adjoining states of the Hindi heartland.
Right. Thank you, Yosham, so much for joining us on the show and sharing the views, because this is an interesting story that we would be watching out for, as well as talk that has actually more than doubled on a YTD basis as well. So that's the story with Aditya Vision. But let's quickly slip into a short break. Up next, we will be joined by the management of Sky Gold. Please stay tuned.